There are three categories to explain a billion rand loss that we talk about in our results. The first portion, which is about 62% of that billion rand, or call it 600 odd million plus, is associated with what we call legacy onerous contracts. The next portion of that loss is explained by the non-cash accounting adjustment that we did. So we've reversed our deferred tax asset, because our view is that those divisions, particularly the roads and some of the construction divisions, when we look forward, the outlook, we don't believe we can actually utilize the tax asset that we have in our balance sheet. So we find it prudent for us to actually impair or reverse that particular asset. And then the balance of the loss is explained by a debt, doubtful debt that we have with our clients, where either one of our clients went into business rescue or some of the other clients were not able to pay us for a number of years. So with that type of doubtful debt, when you sit in front of the auditors, you are required to say what is the prospect of recovery of this debt, and you, as a company, we are confident we can recover part of that debt, but then the auditors show you the evidence as to that debt has been sitting in your book for the last 2 years or 3 years. In accounting terms, you have to impair of that. So the total of that number is about 70 odd million. So 70 million associated with debt that has been written off from the clients, 30% or just under 300 million associated with a non-cash impairment of our deferred tax asset, and the rest is operational losses associated with onerous and some of them very, very old projects that we've been trying to complete for Basil Read. The auditors, when they look at our financial results, they're required by the auditing standards to look at the future of Basil Read. In terms of, if you've posted a billion rand loss, in terms of your going concern or your liquidity or cash to execute on your future, what does that look like? The statement is a very factual statement, and I think it's in the nature of the auditors. And if you look at what has happened in the industry itself of auditing firms, we have to be factual in terms of communicating with our shareholders. So what are they saying in that statement? They're saying they find it appropriate for us to prepare the results for 2017 as if we're a going concern. So that's the first step you've got to understand. They're not saying we need to prepare this the results as if we are liquidating Basil Read. In fact, the statement says it's appropriate for us to prepare this results as a going concern looking into the future. However, they say there are management plans that we've put in place to ensure that we have the right working capital to execute on that order book that we put in there. And what they're raising in the emphasis of matter is that the timing is uncertain. But they're not saying, this is a liquidation preparation of the statement. They are highlighting the timing is uncertain, which we agree with them, even though as management we are confident we will be able to dispose of those non-core assets. We are very far advanced in actually settling or resolving some of the legacy claims. In those numbers, when I spoke about the loss, particularly on the onerous contracts, there is a significant chunk of claims associated with that, in excess of 600 million rand that is sitting in those claims process. It's not an indication of how much we're going to settle or resolve those claims to, but that's just a quantum compared to the loss that we've posted. So there is liquidity coming into the business, and in the recent time we've actually settled some of the claims that are long and legacy claims in that space. So we are fairly confident about the going concern of Basil Read. The statement is factual. It's highlighting the fact that the timing of the cash flow is uncertain, which we agree with. As you know, these are processes that can be prolonged, and it's 2 parties or 3 parties involved in resolving those claims. The focus, besides the external focus, the shareholders, the debt standstill, and obviously the disposal of the non-core assets, we've really focused on improving our management and leadership from the board. You will see that there has been changes at the board, so we've brought in new members who are actually very helpful in us looking at this business going forward. Secondly, the executive team that you have is fairly new. I'm very, very confident on some of the new members that I've brought in that sense. And then furthermore, at the project level, we've gone even further to put in the right people and give them the right support. And furthermore, you can't underestimate the work that we have had to do with our clients, because some of these onerous contracts, it's not just that you are late, it also destroys relationships because your clients have got other stakeholders. So if you're executing a project and in South Africa the scoper in Parliament is looking at everything, we have to work with our clients to ensure that they don't get embarrassed in front of their clients, of their own stakeholders. So building that relationship and making sure that we are in this together, between the client and ourselves, instead of throwing the contracts at each other and finding amicable solution to finish and execute on those projects. And that's what we've been working on. So I'm fairly confident with the renewed energy. We are on the right track to turn around Basil Read. The fact that we haven't added more problematic or marginal contract gives me a lot of confidence that where we've been traditionally profitable, we are now actually releasing that part of the business, and we are reducing the legacy issues. So the future for Basil Read is actually, I'm very positive about that. Majority of that order book is sitting in developments and mining. And if you look at our numbers in mining and developments, historical numbers, you go back 6 years, we've always delivered profit. So I'm fairly confident that when we release that part of the business, we can actually return to the shareholders. We have to make sure that we minimize those areas that we've made mistakes in the past, and make sure that we position our business to be competitive and relevant in this market of construction.